spreading our risk as much as possible. We also want to invest in different sectors. So typically at the minute, I would be advising clients to be invested mainly in telecoms, media and technology, and then perhaps consumer products, financial services, definitely healthcare just now is another one. But we also want a good spread throughout different other different sectors also. And as with the previous slide where I was talking about the different kinds of assets, so equities, bonds, real estate, and so on, we also want to have a good spread throughout those asset classes. It's a good basis, so a lump sum every now and then. We use dollar cost averaging, which is this regular monthly investing, because this tends to give higher returns over the longer term than investing on an ad hoc basis. The regular monthly investing also takes the emotion out of investing, because you're not making decisions based around economic situations or political situations. So for example, with COVID-19, a lot of people would have panicked at the beginning of the pandemic and chosen to sell out of their investments. This isn't the correct strategy for most of us, and it's best that we remain invested for the longer term. Also, just to mention alongside that is that it's a perfect buying opportunity when the markets are down, or there has been a huge dip in the markets like there was with the pandemic, because you're buying at a discount. So for that month, your $1,000 contribution, or whatever it may be, is allowing you to buy relatively more units within those mutual funds that it might in the following months. So how exactly can I help? There are three main ways that I'm helping people with their money. One is with cash in the banks. As I've already mentioned, earning very little interest just now. So if you do have money sitting there that you don't know quite what to do with, you feel it could be working harder for you, then perhaps the way forward for you is to invest some of that. Secondly is with monthly investing. So that's for the medium to long term. And that's from your surplus monthly wage or rent, your utilities, perhaps your childcare costs, your fuel and vehicle maintenance costs, etc. And people, that's where we're helping the bulk of people in Cayman, is with that medium to long-term monthly regular investing. And people are investing towards retirement, towards their children's future education, towards perhaps a property, or just to accumulate wealth, basically, that they couldn't do with cash in the banks. The third way that I'm helping people is with portfolio reviews. So once you have that portfolio of investments in place, we need to review that regularly to make sure that the funds are performing as well as they could do, and to make sure that that investment is doing the job that it was originally intended to do. So what specifically are the reasons for doing those regular monthly investments? Well, firstly, we don't all have a huge amount of capital available to us. So saving money might seem impossible at times, but taking a few proactive steps can safeguard you from potential hardship in the future. The ballpark figure for retirement, comfortable retirement in the US would be around about $1 million. So here in Cayman, with the cost of living being quite so high, we obviously need to try and have even more than that $1 million if possible. Now, I know this sounds an awful lot, It's quite a scary figure to most of us, but we can all do their chunks. Most of us have the means to save something from our monthly income each month, and it does take discipline to do so. But how we can do this is to have direct payments taken from our bank account on a monthly basis, so that it becomes automatic. If, as I said earlier, if we do regularly invest on a monthly basis over a number of years, the resulting sum will be far greater than if we'd invested lump sums at various points over those years. Again, the ways in which I'm helping people then are to provide them with bespoke recommendations based on their own specific financial circumstances, their own attitude to risk. Some people are far more cautious with their money. Others are prepared to take a little bit of extra risk for the potential for better returns, especially if they have a longer investment time frame, so perhaps 25 to 30 years until retirement. We can help you to build up savings in the bank that will be an emergency fund for you and your family. We say 3 to 6 months outgoings for a family and 3 months for someone who's single are an ideal amount to keep in that short-term access fund. As I've said, cash in the bank earning very little interest just now. Everything beyond your emergency fund in the bank isn't working hard enough for you. For real growth, you need to invest for the medium to long term. In short, as has been highlighted by COVID, etc., the government legislated pension in Cayman is not going to be enough for most of us to survive throughout retirement, living the lifestyles that we're presently accustomed to. The plans that we have available at International Financial Planning are accessible to most people because we believe that investing is for everyone. So our minimum lump sum contributions are $7,000 US, and our regular monthly savings minimum is $300 US. And there's no maximum. You can invest as much as you feel you can afford. So to start the process, what we like to do is sit down with our prospective clients and complete what we call a confidential fact find. This allows us to build up a picture of the client's particular financial circumstances and their future goals and requirements. From there, I can make my recommendations about where to invest, and this is based around the client's attitude to risk, the timescale that they have available, and their own particular affordability. So in terms of ongoing service, we're committed to having regular reviews with our clients. This is usually on an annual basis, but we're happy to accommodate those being more frequent if necessary. Some clients are not as comfortable having the annual review, and they would prefer that we saw them more often. So we're happy to do a 6-monthly review, but we're always at the end of a telephone and happy to answer questions over email. The great thing about having those regular reviews is that it helps to keep you on track as well. Because our own finances are usually last on our list of priorities. So it brings it to the fore again with us if we sit down once a year and discuss, are we on track to reach our financial goals? My job is to help people get there. Those annual reviews can also involve making any changes to the portfolio should it be required. Some people like to take a payment holiday. They might want to reduce their contributions or increase them. They might want to increase the level of risk that's involved in their portfolio. So there are lots and lots of ways that we can be helping at those annual reviews to set the stage for going forwards. Thank you for listening. Please feel free to arrange a no obligation meeting with me at any time. I'd love to hear from you. We can do that online, which have found over the last few months has helped worked really well with clients and has helped people to get up and running at that time, during the pandemic with their investments. So yeah, thank you once again, and I hope to hear from you.
Well, thank you very much, Stephanie, for that wonderful presentation. It was indeed a real eye-opener, a real pleasure to hear of all the offerings that your company has and how we can actually start looking at fashioning our future. You know, I know that a lot of us, I confess, a lot of us, we consider sometimes that we're too busy, and you mentioned that we're too busy to think about our financial future. We're just busy doing everything and making ends meet and paying the bills that we never stop to consider what am I planning for the future. And you highlighted that very well indeed. What do you want to say about that? I mean, how important it is that we actually stop and consider the future, because I'm sure you might have heard of people who have come to retirement with nothing, or people who have not put away anything and the difficulties that they face. Speak a little about that.
Yeah, I think it's very easy for all of us to bury our heads in the sand, as it were, and we get overrun with daily life, and work commitments are a huge thing, and we just don't feel that we have the time to sit down and speak with someone like myself. But it's if you had 3 different half-hour sessions with myself and put that strategy in place, that's all you need to do to start off your investments. And then it's a half-hour annual review each year. So it's not a lot of time at all that you've to input into your financial future. So it's, yeah, and I would just urge people to try and make it more of a priority, because there are people like you hear the horror stories of people that have come to retirement and they haven't got enough money to retire on. And it's our individual responsibility, basically, to take care of that.
Yes. And what I know some people say is that, probably I don't make enough. I'm sure a lot of people might be saying, investing, what did they talking about investing? I don't make enough. A point you brought out is that maybe you stop and make a budget, you'll find out that you do have a little left over for investing.
I think so, and it's something that on a daily basis, when I sit down with clients, and we do have a budget calculator tool, and when we run through that tool and use that, we find that clients are often quite surprised with how much extra they could have at the end of the month that they could be investing, because I think all of us have a kind of roundabout figure in our heads of how much we have left over each month. But in actual fact, we could all be a little bit more disciplined, I think, with our money.
Yeah. And in that regard also, sometimes we just run off and spend because we don't have the budget. So I think the point on the budget is very critical, that you actually, I heard someone once say, when you make a budget, you tell your money where to go instead of wondering where your money went.
Exactly. Yeah, indeed.
Yeah. One of the questions that I think some of our viewers might be asking is given the COVID situation now, and with many businesses being impacted, staff layoff, reductions in revenue, is it still worth investing at this time?
I'm really pleased you asked that, actually. Now is a really great time to be investing, because as I kind of referred to earlier with the dollar cost averaging, the monthly averaging, at the minute, you're buying units in mutual funds relatively cheaply. So over time, the value of those investments is going to increase. Once the markets become more buoyant, the value, as I say, is going to increase. So it's a great time to invest. It's not a time to panic if you are already invested. It's a time to just to basically hold on to your financial goals. It's a snapshot in time, that 3 months, 4 months, 5 months, however long this pandemic continues to kind of affect the global economies. But if you think about your individual financial goals, as I say, that's just a snapshot in time of that 25-year period, or whatever that investment time frame is, until retirement or until your children are 18. So it's important to just remain invested and not panic.
Yes, because I'm sure some people might be thinking, with as I say, everything falling apart, I need to run from the market. But you're saying that now is not the time to do that. As a matter of fact, what you're saying is that maybe some people are in fact panicking, and it will be a good time for you to go in and buy cheap.
And it's exactly that. I speak to people on a daily basis that will say to me, oh, I am really interested in getting my investments up and running, or I'm interested in increasing my monthly contributions, but let's just wait and see what happens. Now, by waiting and seeing, in 6 months or a year's time, yeah, the markets might be less volatile, so the stability's come back, but you haven't made the best of buying those units and in the mutual funds at a discounted rate.
Yes. So your main investment vehicle is mutual funds, or is it like shares in individual companies, or what is the main? If I should invest with you, what mainly would the money be used to?
It's mainly mutual funds, but all of these things depend on the specific circumstances of that individual investor, which is why it's important for us to sit down and have go through the fact-finding process, because most of us aren't sophisticated investors. So by using those mutual funds, we're spreading the risk basically for everybody. It's people's hard-earned money, and we don't want to risk that. So by using mutual funds, that's the least risky strategy for most of our clients. However, if you are a more sophisticated investor, it might be your choice to go and invest in those individual company stocks.
So, well, let me ask you a question then. Well, what do you do? What is your investment philosophy?
I'm very conservative, as is IFP as a whole. So it's not about timing the market for me. Many people will say, oh, is this a good time to get into the market or out of the market? Well, it's not about that. It's about having a financial plan and sticking to that over the longer term. Because it is a high risk strategy and it's a punt, and it is fine for people to take a gamble with a portion of their money, but for most of us, we don't have hundreds of thousands of dollars that we can play with. So we need to be a little bit more conservative, and that's what the mutual funds allow us to do alongside working with a financial planner.
Right. That's good, because we hear a lot about these day traders and folks who just buy penny stocks and just speculate on the market. And but you're saying that's not a wise strategy.
Exactly, and it's about, again, lots of questions from time to time. It's about following trends. So people, when the pandemic kicked off, there was a lot of questions about, should I be investing in gold or cryptocurrencies? It just depends what is trending at the time. And we just don't want to follow those trends as a philosophy. We want to be choosing sustainable methods of investing.
Well, I'm very happy that you said that because a lot of our viewers are, conservative folks who they want to take a strategy that they know will maybe not guarantee, but will provide a low risk level that that when they reach retirement, they're not gonna get a letter that says it's all gone, or that we all gambled it on something and it went. You want to know that the person who's managing our money is someone who is steady, who is not going to this trend and that trend, but as you said, just keeping a steady course. The other thing I want to ask you though, as far as, because a lot of people may be listening now and saying, well, she's talking about people who have a lot of money in the bank. She's talking about rich people to come and invest in mutual funds and so on. What's the minimum? Like, what would someone be able to come in with and have a reasonable portfolio, something that they can maintain over a number of years? What's the minimum that you operate at?
So for a cash lump sum, I think my my presentation did refer to that, I'm sure, and it was $7,000 US.
Right. It did.
So and the monthly minimum is $300 US. So I think that those numbers are pretty accessible for most of us in Cayman.
Yes.
At a kind of minimum. And I think we all need to get into the habit of thinking outside of that kind of that misconception of that it's only people that are of high net worth that can work with financial planners and that should be investing. I think we all need to take responsibility and to start just investing as much as is affordable to us for our individual futures.
Right. Not wanting to think of something bad happening, but what would happen in the case of, say, somebody died and are incapacitated? How would their portfolio be handled at that point?
So for the majority of the investments that we work with on a daily basis, they would provide, should something happen as in death to that person, they would pay out 101% of the value of those units in those mutual funds at the time of death. And that would be paid to, if you had named beneficiaries, it would be paid out straight to them. Otherwise, it would be paid out to your estate.
Okay. And what about folks who are say, they're in Cayman now and they started an investment portfolio with you, but they have to go back home, and then where they go back, it's somewhere that has a tax jurisdiction or a higher tax jurisdiction. How would that be handled?
So it's something we're very conscious of, and it's built into our procedures. So at that very first meeting that we have with a client, we will ask them if they intend to remain in Cayman or if they intend to be internationally mobile, because it makes sense for us not to be recommending at that point if the person is aware that they might be relocating in the kind of the short term. It wouldn't be sensible for us to be recommending one of these products in particular, just because of the tax situation, basically. As I said previously, our investments are offshore, which is hugely beneficial for a lot of people if they are taxpayers in another jurisdiction, because those investments are growing tax-free internally. If the client does relocate though at a future time, I would recommend, and I always say to them up front, to speak with a tax advisor, We're not allowed to give tax advice. Obviously, we take it into consideration with the products that we sell, but they should seek that advice at their earliest convenience, basically, and preferably before they do relocate.
Right, yeah, because they're in a new jurisdiction, so get someone in that country with the person to tell them what rules pertain and so on.
Exactly.
So that's understandable. What about persons who have other assets that are not in the portfolio that they have asked you to manage? How do you relate to, and how do you advise them on? How do you get involved in that part of their?
Yeah, so now that's really down to the individual client again. It's their choice. Some people feel that they want to keep their investments separate. So they might have different managers or financial planners looking after different areas of their wealth, or they might choose to transfer their investments, what we call in specie, so that the underlying investment stays the same, but we manage it. So we can do either of those, and it just depends, as I say, on the client's preference.
Yeah, I understand. Now, let me get to this question now that is probably topical at this time in Cayman. What advice would you give someone who is thinking about taking out all their pension funds?
Yeah, I'm really glad you've asked that one. Actually, it's obviously particularly relevant just now, and I've been speaking to a lot of clients about this. I would strongly urge anyone that is thinking of withdrawing that maximum allowed amount from their private pension to seek advice from someone like myself in the first instance. So it's money that you've worked hard for and you've built up over a number of years. So really, it's the intention that that money will remain invested. So realistically, you should be coming to someone like myself and talking about where can I further invest these funds.
Yeah, because even for I think when I think about it, what I think is that that decision is such an important one, because pension is set up for you when you are actually at a point where you can't work anymore, you can't earn anymore. You're just going to be relying on this to see you through. And so, although we have been through a difficult period, or we're going through a difficult period now, if at all someone can, and this is our position, if at all someone can forego removing or spending their pension funds, we wanted to consider that. We don't take a position either way. We're not advising folks on whether they should take their funds or not. But we're saying that it's something that should be approached with a lot of consideration. As you said, if someone like yourself is available to advise, looking at their own individual circumstances, and then advise accordingly, because maybe what's right for one person is not right for another person. But I think the general principle that I would apply to myself and to anyone else is that these funds are intended for, as you'd say, at the end of the road or near the end of the road. And so you want to make sure that you preserve that as best as possible.
Yeah, definitely. I would agree wholeheartedly with that. And the Premier said himself that those funds the pension plans aren't necessarily fit for purpose, but it was always the intention with the introduction of those pension plans that people would invest elsewhere alongside those funds or into AVCs. So perhaps now is a good time for a lot of people to start thinking about maybe doing a little bit of monthly investing on top of the private pension funds that they already have in place. And but they do definitely need to be reinvesting those pension monies if they can.
Yeah, well, I tell you what, Stephanie, I'm very pleased and very happy with the presentation you did this afternoon, and I've learned a lot, and it has been something that has stirred my appreciation of what exactly. As a matter of fact, I might be calling up on you. the question I would probably end with it though is, for all these wonderful services that you're offering, how much does it cost?
And that's a really great question, and it's one that everybody should consider if they're looking around different wealth management companies or financial planners, etc. Is just to check out, because a lot of people will ask for an upfront fee, and not everybody can afford, to give that on day one of the investing process. How I'm paid specifically is the charges that are built into the particular investment plan that my client takes out. I'm paid a small percentage of that for my services by the provider. So there aren't any upfront charges to the client.
Okay, so the fund, so the money that I put in, your fee doesn't come from that. It comes from, is it provider from the mutual fund that you're investing in, or from?
So the provider would hold the particular investment product, and within that you would have several mutual funds. Okay. So there are charges built into that, and but the provider will ultimately pay me.
Yeah, right. I understand. So it's from. Okay, great. Well, it's a pleasure having you on this evening, and I'm sure that a lot of people are now thinking to call that number you put on the screen to say, come in and help me to fashion my investment. A lot of people think, as I said before, about investing as a rich man's game, that it's for people who have a lot of money at the end of the month. But as you said, with just $300, which is 240 CI, we start a portfolio, get expert financial advice, and start to build our financial future. So I encourage everyone to give it thought, to give it serious thought. And if you need to talk further with Stephanie, we'll have her contact information available that you can get in touch with her, and she can come and sit with you and look at your individual circumstance and see how she can help you to plan for the future. Because what's happening, as we all know, is that people are living longer. Retirement is one thing, but sometimes some people are living 20, 30, 40 years beyond retirement. And so we have to think, how are we going to finance that portion of our life when our monthly salary paycheck is not coming in? And so this is a very beneficial session, and our station manager is going to come on shortly, and he has a few other questions that they have been called in, and so we're going to continue the conversation. But for now, we're going to take a break, and we're going to say thanks to everyone for tuning in to ASI Wealth Management Series, and stay tuned as we will continue bringing you these seminars, bringing other experts on to help us as we plan to develop our future, to develop the things that we need to take into consideration as we move forward. And so thank you, Stephanie. I don't know if you have any closing remarks. We'll say that now, and then we'll close.
Just to consider very strongly your financial future and take a little bit of time to address that now. As I said, it's an hour and a half of your time over 3 meetings. Get everything up and running and secure that financial future. And thank you very much for inviting me along. It's been great to speak with you today.
Great.
My name is Isabel, and I want to give a big thank you there to Rohan for the interview he did earlier on in the week with Stephanie. The nice thing is that we've got both Rohan and Stephanie in the studio today. So Stephanie, good evening.
Good evening, Isabel. Good evening, everyone.
I've got a quick question for you, but before I ask, I'm going to tell all of our listeners that they can call in. If you have a live question that you want to ask, you can call on 945-9029. So 945-9029. You can give us a call right away, and we can take that question. If you're listening online, you can put your question there as well. Otherwise, so my first question while we're waiting is, what are bonds? So you mentioned something about investing in bonds.
Yeah, so thanks for that, Isabel. So and that's a really interesting question. So just as you, when you buy shares in a company, when you buy another stake in a company or a corporate bond, you're basically buying into a piece of that company, and whereas the shares will grow over time and will gain from market prices over that time frame, a bond will give the investor a fixed return every year.
Okay.
So, for example, it may give you a 5% return each year. So it's giving you stability into your portfolio because you know that every year you're going to have an annual return of 5% on that particular bond. And the reason we would introduce bonds into a person's portfolio is because that they work in an opposite way to shares or equities.
Okay. Mm-hmm. So that sounds good. So if you're a conservative investor, that might be something good to look into.
Yeah, definitely. Particularly within a mutual fund, we tend to have, and especially within a person's portfolio overall, we would hope to have an element of corporate bonds or fixed return investments that you'll have heard me referring to throughout the piece.
All right, that sounds good. I'll say that number again. So it's 945-9029. If you have any questions and you want Stephanie to answer you today, please feel free to call that number. Or if you're watching online, please feel free to submit your question. Not seeing any questions come through. But because I know Rohan is also online. Rohan, have you thought of any other additional things that you might want Stephanie to advise our listeners on?
Okay, once again, good evening, Stephanie.
Hi,
It
Rohan.
was a pleasure listening to you, giving all those wonderful advice. And I'm sure our listeners have taken note. I know a lot of people are, in fact, thinking about their investment future. And especially now that we see how uncertain life can be, how in the whiff of a moment, our circumstances can drastically change. And so one of the things I'm sure that you did emphasize and that we continue to emphasize is everyone should have an emergency fund, firstly, and also have something put aside for the long term. And so I just want to emphasize that point, as you yourself did, that everyone, it doesn't matter what your resource level is, everyone should think about putting aside something for, as the old folks used to say, a rainy day. So I just want to make that comment while we go to our listeners.
And
I'm not on camera, but I have a question. All right. I want to ask, I overheard, I wasn't listening as keenly right through the time because I was distracted by Isabella and Stephanie. Right. I heard that $300 investment startup. Could you elaborate on that?
Yeah, so we offer regular monthly investing, and that might be over a time frame of 20 or 25 years if you're working towards a financial goal of retirement, or perhaps if you're looking towards your children's future educational goals, so college, university, etc. And yeah, even starting at that low level, that minimum $300, it's over that time span of 20 to 25 years, you're perhaps looking for the potential to at least double those monies. So, and I think it's an accessible amount to a lot of people on Ireland. Just to start at that $300. Obviously, if you can, for affordability reasons, maybe perhaps you have a salary increase in the future. You know, when you can, increase those contributions so that you are staying ahead of inflation and you're not reducing your buying power. But yeah, definitely $300. That's our starting point.
It sounds a bit even better than pension. I should sorry to say it like that, but it could be a pension alternative.
And a lot of people, obviously the pensions, a fantastic way of going, the private employers' pensions, because the employer is also contributing towards that. So that's definitely the way for everyone to go. But alongside that private employer's pension, it's definitely attractive to a lot of people.
Well, I know that we've covered a lot of information, so part of what we want to do is, we only have 2 minutes left, and we want to obviously allow people to digest, and if at another point in time they have additional questions, would like you to get a chance to say your contact information once again, so we'll let you do that before we close. And I've just received a question here. So in your presentation you mentioned you assist people with money in the bank. So you mentioned money in the bank doesn't work well in terms of returns. Could you explain that a little bit?
So although the bank is, we do need to have money in short-term access accounts, and the bank is a really great place to put those monies, you're not earning a lot of interest just now. So it might be 0.1% interest that you would get in the bank. And as a kind of a conservative annual estimate of growth over the long term, when you're investing in the market, we can say around about 5-6% average annual growth. So it's a huge difference. And people see the banks as being a safe place, as it were, to hold their money. But it's not when we take inflation into consideration. So, for example, here in Cayman just now, inflation is at 3%, roundabout. We need to keep ahead of that. Otherwise, we're massively reducing the buying power of the money we have available.
Okay, so if I'm understanding what you've said, you are essentially saying that you need to do a comparison of the interest rates that you are getting from the bank versus what you would get in investing in the markets, and then from there thinking about it long term and figuring out what will be the best way forward.
And again, it depends on our financial goals going forward. So, and everybody's individual circumstances are very different. But yet, let's have a portion of our money in a short-term account in the banks as an emergency fund. But let's make some the majority of our excess monthly income work a lot harder for us.
Okay. We have another question. Good evening, Calvin Adams. He's listening all the way from Trinidad and Tobago. We're happy to have you join us today. So his question is, how do you sift through the plethora of investment vehicles, companies, instruments, products, and services? So he's basically saying that there's just a lot out there. So is there any particular criteria or something that you use when you're really just sifting through to see which ones are the good players that are better to invest in?
And again, it comes down to individuals' circumstances themselves. What's their investment time frame? What's their affordability? What's the financial goal overall? But we do have access to a number of different providers that we've worked with for. IFP was established in 2000. We've worked with these providers for a good long time. We're looking at their long-standing performance, their governance as a service provider as a whole. Are they listed on a stock exchange, for example? How much in assets under management does the company have? All of these things are taken into consideration. But within that, once we do recommend a provider, we're then looking at the specific investment and then the investment funds. So And like you said, there is access to hundreds, if not thousands, of investment funds. But we can select that on an individual basis. But like with everybody in lots of industries, we do probably have funds that we prefer at the time that have maybe performed well over the last year, the last 3 years, 5 years, and so on. And that's not to say that we can guarantee their performance going forwards, but it gives us some reassurance that they would continue to do so.
Okay, so you're using a combination of factors, and if I understood what you said, you're also looking at the different risks associated with each entity, and then even when someone is making an investment, you would be creating a profile for them. So if someone is higher risk or moderate risk or low risk, and then depending on the length of time that they're also asking to invest in, right, then they might be willing to take more risk than someone else.
Exactly, and attitude to risk is one of the most important factors that we're considering. So I'm glad that you pulled that out, Isabel, because some people, and especially depending on the investment time frame that they have available, if you have 30 years until you retire, or 30 years plus, you might be willing to take a little bit more risk with the investments, the mutual funds that you're investing in, than if you were going to retire in 10 years' time, and we can choose accordingly. So we're going to choose maybe that the person who's retiring in 10 years' time is going to be moderately cautious, and they're going to have more invested into corporate bonds or money markets and cash, rather than 90% into shares.
Something like that. Okay, so it's not a one-size-fits-all, which is great. So I think on that note, we are on time, a little bit over. So we'll want to now just wrap it up, I guess, with two things from our end. So one will be just refresh us on your contact information, Stephanie, and then I will make some promotions for the next events that are coming up.
Yeah. So I'm really honoured that I've been invited along to speak with you all this evening. And just finally, if any of this has resonated with any of you, give yourself a gift and send me an email once the show's over. I'm on splues@ifp.ky, or you can call 769-5357, and I'll be happy to arrange to have a more detailed chat with you next week, or we can have an online meeting. But all too often we do neglect our own financial situation because life gets in the way, and it's only going to take you an hour of your time to make a plan and get an account up and running. So thank you very much once again.
Huge thank you, Stephanie. Huge thank you, Rohan. Really appreciate your time, and we also appreciate that as ASI, our role is really just to facilitate dialogue. So all of our members and all of our listeners, we encourage you to dig deeper, dig further, and find what works for you. And as you're aware, most of you, we are in the middle of our wealth management series. This is series number 3. So we have 3 more to go before our big conference. And our next session, which is session number 4, is going to be next week, same time, 7 p.m. to 8 p.m. right here. And then the one session number 6 will also be the week after. So essentially next week, it's about money matters. Whether you're single or you're married, you don't want to miss next week. That's the session for you. The week after, it's going to be teaching children about money. You don't want to miss that one either. We have a double team that's coming to present both sessions. You'll see the flyer. It should be out by this weekend, and it's promising to be very, very exciting. So bring your family, friends, everyone that you think would benefit from talking about money matters. Again, it's always practical, different perspectives, so that at the end of the day, all of us become better stewards of what God has blessed us with. So we want to say a huge thank you also to Dwayne for all the logistics. We appreciate that. And God bless you, and have a great week ahead. Good night.
Good night, everyone.
Raise 87.9 FM now offers